And let's get right to the banks with Bank of America and Morgan Stanley headlining today's results. Some stellar performance now that the market has opened as well. Morgan Stanley up nearly 7%. That call is still ongoing. Ted Pick was just talking about the golden age of investment banking, which I think you can see really reflected in these results. They beat on all metrics, essentially, except for expenses. But, in terms of their three major businesses, big beats relative to expectations. Investment banking up 44% during the quarter, led largely by advisory, which is basically the fees generated from advising on mergers and acquisitions transactions, as well as equity underwriting, which was a huge beat for them as well. And equities trading beat, and that was up 35%. Before the call, I was able to actually talk with Morgan Stanley CFO Sharon Yeshaya about the current M&A environment, and she had some interesting comments just about, she says basically from the lens, we are just at the beginning. Oh, okay, she is talking about M&A for the firm itself. So they have a lot of excess capital, and she says, quote, we have the optionality and we're in a position where those inorganic opportunities, to the extent that we execute, are going to be places that are key and core to the current strategy. So we don't think we need to do anything transformational. Obviously, Morgan Stanley has the track record of doing some very transformational deals. But with that excess capital, especially with the rollback or the expected rollback of some of the regulations that have been causing them to hold more, there are a lot of questions around, okay, what are you going to do with it now? You have all this excess capital. Are you going to be lending more? Are you going to be buying other companies? And she basically said in this one-on-one conversation, we feel like our transformational deals have been done. We'll look for things that are beneficial to us. But right now, we're really focused on organic growth at this point in time. And just that comment that she said on the deal-making environment broadly, she says from our lens, we're just at the beginning. And she talked a bit about how the current earnings that you see reflected today are largely driven by strategics and IPOs, and sponsors still have not really done enough deals to be reflected in the results, and that's largely comprising the pipeline. So as you know, David, that obviously could lead to a big uptick, a big unlock for future deal-making activity once the sponsors really get involved in a big way. So that's kind of something that we heard on the Goldman Sachs call. We heard that on the JP Morgan call with the $1 trillion in dry powder, and whether that ultimately leads to more deal activity. But basically, Yeshaya said, that's not what these results are about. These are strategics, these are IPOs, and there's still this huge untapped opportunity for deal-making down the road.
Yeah, interesting. I mean, it's unclear when and if the financial sponsors, the leverage buyouts that we're talking about, private equity will really come to the fore. Obviously, they have a lot of money in funds that they have yet to spend, but they also have to get exits done from other funds that predate whatever the new money may be, and you want to return the capital before you call new capital.
Yes.
That said, what I've been hearing and been saying on air for quite some time is there's certainly a lot of optimism around potential deals, strategic and the like. And Bank of America also on their call, and I know you know this, said similarly that there more certainty around trade and tariffs, and that pickup in activity in the third quarter as well. They cite double digits in terms of what they're seeing in terms of potential activity. We'll see. We did have the largest go private of all time just last week,
right,
where the Saudis are buying Electronic Arts for over $50+ billion, a deal that Goldman advised on and JP Morgan financed. And the fees there, I'm sure, will be quite significant.
Yeah. And again, those are not reflected in this quarter's results even. It'll only be once that deal closes. And I guess the big question is what lower interest rates mean for the prospect of additional M&A activity, particularly as it pertains to sponsors. We heard a little bit of disagreement on the calls yesterday about that with, I believe it was JP Morgan saying, I don't see how that materially changes the environment that we're currently in, whereas Goldman was on the mindset that, lower rates, cheaper financing, let's get this thing going, basically. So, we'll see how that ultimately plays out over time.